time for a business report. Joining me is Evan Lucas, the Chief Market Strategist at InvestSmart. Evan, good morning. China and US sign the first phase of their new trade deal with an array of measures. Who wins and who is this phase one all done?
It's a good question, Danica. Look, in terms of who wins, because that's certainly what the president is certainly using his language around, is that he believes it's America. It's interesting because the way you look at phase one is that realistically it's around intellectual property, particularly is how it's been very heavily sort of weighted with regards from the American sides. There is now enforceable laws, and I say that slightly hesitantly, considering that, again, there isn't a huge amount of actually sort of a body. It's not the World Trade Organization, etc., to actually go to enforce all this. But there's now laws on the Chinese state around any form of sort of embezzlement of IP out of the US. Also, state-backed sort of issues around actually leaking out data is also now covered in this deal. There's a $200 billion accelerated package from China to actually buy US goods to try and close the trade gap. Now, that trade gap is still absolutely ginormous, and even with that $200 billion worth of spending, it won't get anywhere near the level that the president needs. He needs it to move by about $520 billion US dollars to close it up. So it's an interesting step. So the question, as you said, does this all done, one done? Some people believe it is, because the other part of it is the next step would have to happen after November 2020, after the general election for the presidency. It's still probable that he will win, but in saying that, any form of phase two or phase three, whatever we want to call it, is a very, very long way away. And the way the markets reacted in the US and also in Europe last night to this deal was, yes, we made a new record all-time high in the S&P 500, but it wasn't any sort of level that you would expect to see a real movement when you see a deal like this done. It's been 3 years in the making, and if phase two takes the same amount of time, there's still a long way to go before the US-China trade issue closes up.
And November home loans data is out today. Is the house price growth beginning to be reflected in lending growth?
Yes and no. So house price growth has been coming on the back that at the moment demand has gone back up. So we have seen particularly the first homeowners really come back into the market quite significantly over the last sort of half of the calendar year last year. What the numbers are telling you in home loan growth and in lending growth, the volume of this is actually quite low. So that we've been seeing reflected in, actually, if you look at the number of houses actually being advertised on, advertising sites, places like, realestate.com.au or Domain, etc., are actually still at levels that are probably about 2010-11 numbers. If you look at clearance rates, yes, they're well and truly back up, but supply is actually at 2009 levels as well. So yes, prices is up, but that's just simple economics, because supply is low, demand is high, it's putting prices up. And that's why if you look at lending growth, expectations for November, which was an incredible month of price growth, is only expected to grow by about 0.4% year on year. So it's very, very low. And this is the question that everybody's asking. Everybody expects 2020 to be a big year for housing and see housing growth continue to move on. But the reason for it is because people are still quite nervous about selling their house. They don't believe they're going to get the kind of price they got in 2016 or 17 when we got the housing price sort of peak, because of what happened through most of 2018 and pretty much all of 2019. So until that differential in supply-demand sort of closes up, you're not going to see lending growth at the kind of levels that we saw through 2016-17.
And just finally, ASX sets new record all-time high yesterday. Is this at all sustainable?
Probably not, and the reason I say that, there was a bit of what we refer to a bit technically as what we call the witching. So there was options closing yesterday. We were the only market in the Asian region and also in Europe to have a positive day. But overall, the momentum is there, and this has been the argument everybody asks is, can it keep going? Well, the US is showing that it can. They made new record all-time highs, as I said before. Europe's doing the same, and so is Asia. And nothing really is changing in terms of what's driving that. And that's the fact that at the moment, central banks globally are putting a huge amount of money into their respective economies, and that's flowing into not just housing and things like that, but also into equity. So yes, we might come back off over the next couple of weeks, but over the year it still looks very, very positive because of that flow of funds.
Evan Lucas, thank you so much.